Hello, I'm Mark Learmonth, Caledonia's Chief Executive, and I'd just like to run you through our latest corporate presentation. Here's the disclaimer about forward-looking statements. This isn't normally the presentation team would be me. It would include Victor Gapare, who's another executive director. It would include Chester, our Chief Financial Officer, and Camilla, our Vice President, Group Communications. But today you've just got me. All right, so by way of background, we are a Zimbabwe-focused gold producer and explorer. The core of the business is something called the Blanket gold mine, which we acquired in 2006. And that's a highly cash-generative sort of core asset on which we've substantially increased production since we bought it. But I'll talk a bit more about Blanket in a moment. And then on top of that, now we've got a very attractive portfolio of new opportunities, Bilboes and Motapa, and then third and probably least important is an asset called Maligreen, but again, something on those later on. And a core component of our sort of value proposition is that for many years now, we've returned value to shareholders by paying a dividend, a quarterly dividend. And we think that's a great discipline, and it's something that we hope to continue going forwards. So by way of overview, we're an established gold producer with a good portfolio of exploration assets. We're domiciled in Jersey in the Channel Islands, which might sound a little bit unusual, but it's effectively a tax-neutral jurisdiction. We used to be a Canadian company, which meant that we incurred some quite punitive corporation tax, income tax issues, and capital gains tax issues in Canada, even though we've got no business in Canada. And critically, it meant that our dividends would incur Canadian withholding tax. So we moved out of Canada in 2016 and are now domiciled in Jersey in the Channel Islands. We're listed on 3 exchanges. By far the most important is the NYSE, the American exchange, where about 95% of our liquidity is. Also on AIM in London, which is less important. And then on something called the Victoria Falls Exchange, the VFX in Zimbabwe, which we listed on for technical reasons about a couple of years ago to increase our access to foreign currency in Zimbabwe. But actually, we've been very, very surprised by the strength and depth of investor interest in Zimbabwe, which actually has been very, very, very nice for us. As I mentioned, we're a quarterly dividend payer since 2012. We pay 14 US cents per quarter, and our yield is currently, I think it's just over 5%. So by way of background, the main asset, as I mentioned, is the Blanket mine in the south of Zimbabwe. And we've invested quite substantially in that, most recently in something called the Central Shaft, which has allowed us to increase production to about 80,000 ounces a year. And in the quarter just finished, quarter 3 of 2023, that was a record production quarter of nearly 21,800 ounces for the quarter. Last year we produced about 81,000. This year we'll produce something in the range of 75 to 80. And last year's all-in sustaining cost was just below $900 an ounce. So a relatively low-cost producer. So that's Blanket, which is a cash-generative sort of core of the business. Then in January this year, we completed the acquisition of an asset called Bilboes, which has a Canadian resource, M&I resource of about 2.6 million ounces at 2.26 grams per ton, and a further 500,000 in inferred. So in terms of African gold opportunities, it's relatively large, but it is relatively high grade, which is critical. Most new open pit operations, gold operations in Africa, are below 1 gram a ton. So to have something well above 2 is very good. Then more recently, about this time last year, we acquired a development and exploration asset called Motapa, which, as you'll see, is immediately adjacent to Bilboes. Now, there's very little information, certainly no information in the public domain that we could put out there on Motapa, but we are very excited about that, and we think it's got great geological prospectivity, and Motapa and Bilboes together could in due course become a real first division Premier League gold asset. And then third, and I'm afraid least, it's the asset that we bought first, is an asset called Maligreen, which is slightly further north than Bilboes and Motapa. And that has about 400,000 of M&I and a further 400,000 of of inferred. But that's very much not our main priority. Our main priority is on Bilboes and Motapa. So let's look at Blanket and the central shaft. What we've done, we started doing this project, the central shaft project, in 2015. So 2015 to 2022, we spent about $80 million on the shaft and about another sort of $30 million or so on related infrastructure, all funded from internal cash flows. The shaft is a 6-meter diameter 4-compartment shaft going in a single drop from surface to just below 1,200 meters. And as you can see in a moment, effectively what we've done is we've constructed a new mine underneath the old mine. And let me just show this in this diagram here. This is a long section of the Blanket mining area. That's about 3 kilometers from left to right. And we exploit a series of nearly vertical ore bodies. On the left, we've got Lima. On the right, we've got Jethro. And the infrastructure that was in place when we bought this asset from Kinross in 2006 was the stuff that's shown in green. So that, in summary, is the number 4 shaft, which goes down to 750 meters below surface, and then horizontal development in 3 directions. And you can see that the number 4 shaft is kind of not really well positioned. It's towards the right hand side of the overall mining area. And actually, number 4 shaft really only handled equipment and materials. The men had to go down a shaft which is even further over towards the right. And if some poor character was having to work on the left-hand side of the mining area, that could take 2.5 hours to get there and a further 2.5 hours to walk back again. So it was not the most efficient setup. But then also, more importantly for us, is this mine, Blanket Mine, commenced producing in 1907. So it's been producing for well over 100 years. And the material available to mine above 750 meters was now becoming very, very depleted. And so frankly, by the time it got to 2015, we had no choice. We had to go deeper. Otherwise, the mine would close down in about 2019. So we started sinking the central shaft in 2015. The shaft itself, the barrel of the shaft was completed in 2019. Then we had to equip it, and that was completed in 2021. And now we're busy, well advanced on doing this horizontal infrastructure development to open up new areas below 750 meters for production, but also more importantly, we're now able to restart our deep level exploration, which I'll talk about in a moment, which has some quite encouraging results. So effectively what we've done is we've constructed a brand new mine underneath the old mining operation, and the current mine life is out to 2034. So that's Blanket. The only operating difficulty that we face in Zimbabwe is electricity. And I'm sure we're going to talk about this later on. But the problem in Zimbabwe, along with say South Africa, is that Zimbabwe just doesn't produce enough electricity to meet its demand. Okay, the difference between South Africa and Zimbabwe is that in Zimbabwe, the government has been very accommodating and very encouraging in helping us to construct a new solar project. So we raised some money on the New York Stock Exchange. We raised about $12 million in 2021 on the New York Stock Exchange. And we bought and we invested in this solar project, which is immediately adjacent to the mining operation. So on the pictures you can see on the right-hand side, the top picture, you can see the solar plant. And then on the other side of the road, that is effectively the mining area. That's some of the residential units in the mine. And the mine itself is a little bit further north. So it's right next door to the mine. It cost us about $14 million. We commissioned it early in 2023, and that provides about 25% of Blanket's average daily requirements. The solar plant is owned 100% by Caledonia. Caledonia only owns about 66% of Blanket. So the solar project sells power to Blanket at Blanket's historic average cost of power, so that we neither advantage nor disadvantage the minority shareholders in Blanket. And that means that the economic benefit of the solar project is recognised at the all-in sustaining cost level, not at the on-mine level. But having said that, it's been a great investment in terms of obviously enhancing our ESG credentials, but critically reducing our reliance on the grid, displacing diesel power, which is very expensive, and helping us to keep our costs down. So that's been a great investment for us. Right, I mentioned earlier on exploration, and having completed the central shaft, we can start producing at deeper levels. It also gives us the logistical flexibility to restart the deep level exploration program. Yet we started in January. Between January and May, we did about 5,600 meters of drilling. There's a further nearly 13,000 meters planned for the remainder of the year. But based on that first sort of 5,500 meters, we published the drilling results in the middle of the year. And in general, something like 2/3 of all the holes drilled came back substantially better in terms of width and grade. So we're currently digesting and incorporating those drilling results into our resource models. But in due course, it will give rise to an increase in the total mineable ounces above which we can get from the existing infrastructure. So above 1,200 meters, which clearly will extend the life of mine. The remaining 13,000 meters of drilling that's ongoing, that's taking place in the sort of the right-hand area of the mine, and we'd expect to publish those results, I'd have thought, sometime early in 2024. So it's too early for me to speculate as to what those results might be. But clearly, based on the results that we've published so far, it's quite clear that Blanket, even though it's over 100 years old, still has very significant exploration potential. And that's even before we start looking for material below the existing infrastructure, below 1,200 meters, which will be the future phase of exploration activity. So that's Blanket. It's a nice little core asset, cash generative, is great, but not really got great growth potential. Really, Blanket will probably keep going at about 80,000 ounces, plus or minus. Currently for the next 10 years, we'd hope to extend that a bit longer. It really doesn't have, unless we find something very, very special there, doesn't really have the sort of sex and violence factor to increase production substantially. So on that basis, we're very comfortable operating in Zimbabwe. Zimbabwe is highly prospective for gold. Until the 1980s, Zimbabwe was Africa's second biggest gold producer, behind South Africa and Ghana. And the only reason that Zimbabwe's gold production hasn't blossomed over the course of the last sort of 50 years or so is because of the adverse investment climate under Robert Mugabe. That has changed. We're in Zimbabwe. We know how to operate in Zimbabwe. We think there's some great opportunities there, and we're very pleased to have got our hands on the package of assets that we've been pursuing for quite some time. So let's just talk about what we've got. The asset that is the immediate opportunity is something called Bilboes Gold. We've been chasing Bilboes Gold since 2016. We finalized the transaction in July 2022, and then that transaction was completed in January 2023. We acquired it primarily through the issue of Caledonia shares. So we issued just over 5.1 million Caledonia shares, which gave the purchasers about 28.5% of our fully diluted equity. And one of those shareholders also took fewer shares, but took a net smelter royalty. So the dollar value of the consideration, excluding the royalty, which you clearly we can't put a value on that because it depends on the future gold price, was about $65 million. So relatively cheap in terms of a dollar per resource ounce basis. But as I mentioned earlier on, the asset is, even though it's relatively cheap, it's quite a big asset and it's relatively high grade. So we think it's a good deal. The main shareholder in Bilboes is a chap called Victor Gapare, who's a very prominent Zimbabwean mining entrepreneur. I've known him for about 20 years. He's, following the transaction, has joined Caledonia's board as an executive director and is actually Caledonia's largest shareholder, with about 12% of our diluted equity. Now, there is an existing feasibility in existence in respect to this property. That was prepared by the vendors. That has an effective date of December 2021, so it's not particularly old, but we all know that December 2021 was pre the Russian invasion of Ukraine, and life has changed considerably since then. So whilst there's nothing wrong with that feasibility study, we are refreshing it to update it for the current environment. And that's ongoing work, and I'll talk about that in a moment. But based on the existing feasibility study, there is and I've got some information on it on the next slide. The existing feasibility study, it's got a production of about 170,000 ounces a year on average for a 10-year life of mine. The peak funding requirement was about $250 million. Now, clearly that will have gone up. And the economic returns, looking at 1650, the post-tax NPV is just over $300 million, internal rate of return of 33%, and a relatively low all-in sustaining cost. Now, we're updating that feasibility for the current environment, and it's fair to say that everything's gone up. The gold price has gone up, costs have gone up. So in general, it's likely that this project will be somewhat bigger. Now, what we're doing is we are obviously refreshing this existing feasibility study, but we're also doing our own feasibility study, which is considering a slightly different commercialization approach on a phased basis. So our objective in developing this asset is to optimize the NPV per Caledonia share. And so that's a question of balancing growth and maximizing growth and minimizing dilution. And so given the dilutive effect of funding these projects, it may be that we will find a better, a more commercially acceptable approach that's best for Caledonia shareholders is to have a slightly slower, phased approach to growth, which minimizes dilution. That work's started, it's ongoing, and we'll start to see the results of that, other thought, sometime next year. So that's Bilboes. And then immediately adjacent to Bilboes is an asset called Motapa. Now, originally, Bilboes and Motapa were owned together by Anglo-American Zimbabwe in the 80s. And when Anglo-American withdrew from Zimbabwe, somehow this lovely asset got split into Bilboes and Motapa. We're very pleased that we've put it back together again. So Motapa has a lease area of about 2,200 hectares, which is, I think, about 7 or 8 square miles. It is absolutely enormous. We bought it for just over $8 million. About 300,000 ounces of gold has been produced there in the past by Anglo-American. And there is old drill data, but the old drill data is by no means of a standard that we could publish. So internally, we're very confident and highly very excited about the exploration potential at Motapa, but it does need quite a lot of work doing on it. So our immediate focus will be to turn Bilboes to account, start to generate some cash from Bilboes, and eventually get Bilboes running at its full production rate of, say, 160, 170,000 ounces a year. And then in the meantime, do further exploration at Motapa so that we can then bolt Motapa onto the Bilboes project, with the idea of putting a combined mining operation, which could be as much as 350,000 ounces a year aspirationally. Then last, and I'm afraid least, is the first asset we bought. We bought it for about $4 million. It's called Maligreen. That's slightly further north than Bilboes Motapa. It had 1 million ounces of inferred. Since we bought it, we've upgraded about half of that to, so it's about 440,000 of M&I. And again, a reasonable grade of 1.7, and a further inferred resource of another 400,000 at 2 grams a tonne. And it's fair to say there is also significant exploration potential, actually at Maligreen and at Bilboes as well. So that's a sort of an overview. Operating as we do in Zimbabwe, we have to take our social obligations very, very carefully. As I mentioned, Caledonia owns 64% of Blanket Mine. 16% is held by the government. 10% is held by the local community. And you can see there, one of the pictures is the previous general manager at Blanket Mine handing over a big dividend check to the representative of the local community. And then a further 10% is held by the workers. So that means that the community participate to the tune of about $1.5 million in dividend revenue every year. And then on top of that, Caledonia has its own CSR program focusing on the usual areas of education, healthcare, that sort of stuff. And we've probably spent about 1% of our revenue, so that's another $1 million, $1.5 million on that CSR project. And you can see there a picture of one of the local schools that we've rehabilitated. So we take our social obligations very, very seriously. Obviously, environmental, as a gold producer, we have to be very careful about minimizing our environmental footprint. So we're looking at reducing our GHG emissions. We're very careful about our usage of cyanide and also our tailings facilities. And then when it comes to governance, we are SEC registered, which imposes a very, very high level of governance on us, and I'm very confident that we comply with that fully. So in terms of outlook, we aim to continue Blanket producing at 80,000 ounces a year as a core cash-generating asset in the business. We want to complete the feasibility study at Bilboes with a view to optimizing NPV per Caledonia share. So that's all about balancing growth and minimizing equity dilution. We're continuing to invest for growth to create the best long-term growth outlook that we can for our shareholders. And there's a core of that is getting money back to shareholders by way of dividends. And so our strategy is focused on Zimbabwe to become a multi-asset, mid-tier Zimbabwe-focused gold producer. So I think that that draws the presentation to an end. Thank you.
Thank you for an excellent presentation, Mark. We will now move over to the Q&A session, where we first will go over Caledonia's management team and their track record. Then we'll discuss Caledonia's assets, primarily Blanket and Bilboes, and how they are planning to develop Bilboes and optimize Blanket. Thereafter, we'll go through Caledonia's capital structure and financial position. Finally, we will ask higher-level strategic questions, such as how the management team is planning on allocating its generated free cash flows and what vision they have for the company. But first, we'll start with the team. Could you tell me a little bit about yourself and your career?
Yeah, I'm English. I qualified as an accountant in London, and then I left accounting pretty much as quickly as I could because I didn't really enjoy it. And I went into merchant banking, which is like investment banking for gentlemen in London. And over time, I gravitated to doing work in Africa and in the mining space. And then eventually I ended up working in Johannesburg, where I did a lot of work for Sud Electra, which was the precursor to Xstrata. Ended up running a small investment bank in Zimbabwe, in South Africa, where we had a lot of fun doing work for people like Patrice Motsepe and Harmony. But then it came to sort of mid-2008, just before the crash, actually. And I decided that I was kind of fed up running around after other people's businesses, and I really wanted to get involved in, more fully involved in a business I was contributing to on an everyday basis. So I moved to the other side of the fence and joined a small mining company, Caledonia, which at that time was focused on a cobalt exploration play in Zambia. I joined there in 2008, initially as Vice President, Investor Relations and Corporate Development. Then I became the CFO in 2014, and then I became the Chief Executive in January 2022. So that's my background.
You worked at Caledonia for more than a decade, so I would like to ask you, what do you consider to be your greatest achievements during that time?
Actually, oddly enough, it's doing the indigenization deals. The environment that we worked in 2012 was very, very hostile. Robert Mugabe who's the president at that time, was under a huge amount of political pressure domestically, and he had a very, very aggressive local ownership program, which at that time required that 51% of any business had to be owned by Zimbabweans. Now that's since changed. Zimbabwe's rode back from that. But we came under a huge amount of pressure. And do you know what? We could and we should have done something sooner. But I orchestrated and devised the indigenization deals that we've done. And as I mentioned earlier on, the fact that we've got 10% community ownership and 10% worker ownership is great. I mean, I think we'll probably talk about this in a moment, but it completely slices through those sort of difficulties that you get with community relations elsewhere in Africa and South America. And having the government as a shareholder at 16% also means that everyone's got an alignment of interest. Everyone's goal aligned. So actually putting that together in 2012 has actually created a very good foundation for us to grow this business in Zimbabwe in a way that demonstrably benefits all stakeholders, and it smooths away a lot of problems that would occur, that are occurring for other mining companies elsewhere in the world. So that's the thing I'm probably most, even though it's saying a bit of a, it was a bit of a, yeah, it's actually, I'm very proud of having done it, frankly.
Hello, Chester. Could you tell the viewers a little bit about yourself and your career, and also how you came to join Caledonia?
Yes, thank you, Jasper. Thank you for the opportunity. I joined the Caledonia team at the end of 2014. Before that, I worked for KPMG, where I performed various audits, advisory, and tax roles for New York Stock Exchange, TSX, and JSE listed companies. It was focused mostly on the energy and natural resources sector, and now I've been in that space for almost 15 years. At the end of 2014, I joined the Caledonia team as finance manager, group finance manager under Mark Learmonth. He's now CEO, previously CFO, and I pretty much did everything finance for the Caledonia group. And that coincided with the expansion program at Blanket, where we increased our production, sank shaft. And in 2022, I was promoted to the CFO role at Caledonia. In addition to the group financial manager role, I performed the chief information officer role from late 2018, where I was responsible for various IT-related programs and structures that are put in place, ranging from procurement to clocking systems. And a very interesting project that I was asked to head up was the Blanket Mine solar plant, where we constructed a 12.2 megawatt AC solar plant. We had to raise some money on the New York Stock Exchange. We raised about $13 million for that. We constructed the plant, commissioned the plant, and later then refinanced the plant in the local debt markets of Zimbabwe. And now we are looking at selling that plant and reinvesting those cash flows into new gold mining projects that yield higher returns. So that is quite interesting for me. And in a nutshell, that's very much what I did for Caledonia in the last 8 years.
Hello, Dana. Could you tell us a little bit about yourself and about your career?
Hi, Jasper. Yes, I'm a mining engineer, BSc mining engineering degree. Also achieved the MBA, and I've been in the mining industry. Started at the bottom in 1987 of Gencor mining company. Then we merged with Goldfields, and so my training was in big mining companies, and I left Goldfields in 2009, and started joining smaller companies, and eventually 2013 I joined Caledonia Mining as chief operating officer, and my whole career was focused on production and especially building new mines. So I've been involved in 5 new mines that we built during my career. And since 2013, end of 2013, I am at Caledonia Mining.
Craig, could you tell me a little bit about yourself and your career?
Okay, so I'm currently 53 years old. I've been in the mining industry since I was 18. I started my career as a geology bursar with Goldfields of South Africa. I went through their training process and I ended up starting work at Kloof and West Driefontein gold mines out in South Africa. And I was also present when Northern Platinum was sinking their second shaft. I was a shaft geologist there and involved in the on-mine development. After Goldfields, I left Goldfields to join Harmony Gold Mines. I joined them when they embarked on their acquisition trail. So when they acquired Unisol Gold Mines, I joined there. as a senior geologist. I then worked my way up, became a ore resource manager, and eventually that ended up being the group ore resource manager. So I was exposed to the acquisitions of Unisel, of Elandsrand and Deelkrol, of Randfontein Estates, Free Gold, Evander, and I was part of their change management team. So for each acquisition that we did, we had a small team that went into effectively change the hearts and minds of people and to implement what I think most of the industry knows as the Harmony Way. I was instrumental in developing the mineral resource management systems for the group. I then left Harmony after probably about 8 or 9 years, and I joined a small company called Simmer and Jack Mines, which had some old mines out on the Eastern Transvaal. Opened them up, developed those old mines. We were trying to get them into a trackless type mining setup. I then left them for a short while. I became a principal consultant for a small consultancy in Perth, Australia. Eventually, the company Simmer and Jack actually asked me to come back, which I did, and then I stayed with them for a further 4 or 5 years as their group technical manager, looking after mineral resource management and exploration. And then I went back to the same consultancy that I was with in Perth. A lot of mergers and acquisitions. We had a small partnership with BDO, but most of my time was spent on mineral resource estimation for gold, uranium, copper, bauxite, of all things. And in that time, I spent time in China, Mongolia, Papua New Guinea, Kenya, Namibia. So seen a lot of different types of operations, both underground and open pit or open cast. I then joined African Consolidated Resources when they were starting to develop the Pixton Peerless mine, gold mine in Zimbabwe. I did most of the mine designs for them, the open pit scheduling, had a look at some further exploration for them. We then divested out of Zimbabwe, and my most recent focus has been in Romania, in Eastern Europe. Started up a copper open pit, polymetallic mine, gold, silver, copper, lead, zinc. We mined that as an open pit for about 3 or 4 years. We then reopened a underground polymetallic mine by heat supply. Went to China, sourced the equipment, and got them going. And then recently I've joined Caledonia Mining in March of this year as the VP of Technical Services.
What is the management's ownership in Caledonia?
Well, I've got about 1%. The previous chief executive, who is still on the board, he's got about 1%. And then, as I mentioned in the presentation, Victor Gapare, who was the controlling shareholder in the Bilboes asset that we bought, he's got about 12% of the business. So management, I've got 1, Steve's got 1, Victor's got 12. That's fairly significant management shareholding.
Your largest shareholder, Toziyana Resources, that isn't Victor Gapare, right?
Yeah, it is. That's a vehicle. That's a family trust. So when you ask about Toziyana's aspirations with its shareholding, I sit with Victor every day, and Victor's clear intention is to work with the rest of the management team to steer this company towards achieving our objective of being a mid-tier multi-asset business in Zimbabwe and maximizing shareholder value. So his intention is to stay invested and participate in the growth that we want to create for all shareholders. He's not a seller.
We'll now move on to Caledonia's assets, which primarily consist of the Blanket gold mine, producing 80,000 ounces per year, and the large open-pit gold mining project Bilboes, all located in Zimbabwe. We'll discuss how Caledonia can optimize the Blanket mine and how they plan on developing Bilboes. So Caledonia Mining, you purchased the mine in the Blanket mine in 2006. Could you give us a brief explanation on the corporate history of Caledonia?
Yeah, well, Caledonia started, I think, in the 1980s by putting together 4 other companies. Importantly, one of which was SEC registered. That's important. I'll come back to that in a minute. And it was a Canadian company, it's a Toronto listed company. And when I joined in 2008, we'd bought Blanket Mine in 2006 from Kinross for I think about $4 million. But frankly, that really wasn't the focus at the time. The focus at the time was copper and cobalt exploration in Zambia, which I'm afraid turned out to be a complete waste of time. But at that time, we had a real rag bag of assets, diamond exploration joint ventures in Zambia and Canada, and PGM stuff in South Africa, and it was all too much, too unfocused. It was never going to go anywhere. So from 2008 onwards, we rationalized the portfolio to make it focus on the asset that was the best asset that was in the portfolio, which is Blanket Mine. And over really since 2008 until 2022, we've spent about $250 million on Blanket Mine. We've increased production from sort of 10,000 ounces to 80,000 ounces. And so we've really invested hard in that business using internal cash flows to turn a sort of promising little duckling into something that's actually quite a nice sort of duck. But it's fine. So we've done well to take it from where it was to where it is. But now we need more growth, and Blanket, whilst it's a lovely asset, really doesn't have the great growth potential that we're looking for. So hence the focus on looking at other stuff. So I think now the point was, I think I mentioned earlier, we were a Canadian company, which meant that we incurred all sorts of silly Canadian taxes, withholding tax on our dividends. The Canadians had saddled us with some really quite onerous CGT liabilities. And so at that time, we decided, well, look, there's no point in being in Canada because it's so tax inefficient. So we moved the company from Canada to Jersey, which is a tax neutral jurisdiction. So there's zero income tax in Jersey. Our dividends don't incur withholding tax. And then the other thing we did is, recognizing the fact that we're SEC registered, we got a listing on the NYSE American, a proper listing, which is well regulated, because we had to comply with all the regulatory stuff anyway. And then we terminated Toronto, the TSX listing, and that substantially improved our trading liquidity in the States, which is about 95% of our liquidity. On a reasonable day, you'll get $1 million worth of shares trading hands changing hands in New York. So that's worked well for us. Okay, I think that's enough of the background.
Caledonia owns 64% of the Blanket mine. Who are the other owners?
Yeah, we're actually very proud to say that 10% of the mine is owned by the community, and then 10% is owned by the workers themselves, and then the rest, 16%, is owned by the government. And we, especially the ownership of the community and the workers, is working for us.
Is that a typical model in Zimbabwe, that workers and communities own a part of the mine?
No, it's not typical. I'm not sure if there are anybody else, but as far as I know, we're the only company that's got this structure in place.
I would like to move on to production. So you just had a record quarter of production. You had the 21.8 thousand ounces of gold produced in Q3. What contributed to the high production?
Yes, if you look at it, last year we achieved our 80,000 ounces, and we were in a build-up phase over the last 5 years. And normally, when you sink a shaft, I mean, after you finish the shaft, it takes you about 4 or 5 years before you actually start production. But because we had access from the old mine via the declines, we could open up the ore body a lot quicker, and that's why we finished the shaft, and we were also already at peak build-up, 80,000 ounces per year. Now COVID intervened, and then also the war in the Ukraine. But basically, what happened was over these 3 years, we signed on a lot of new people, and especially on the management side and the supervisor side, 50% of those were new. And we had to go into a real retraining in management and leadership, and especially focusing on culture and behavior to get our safety right, to get all these new people on board. And, that first of all contributed to some of the issues we had in the first quarter, but also, all the effort that we put into the training, and especially the team building exercise and changing the behavior is starting to come together now. And what we saw is, and we focus on a daily basis on daily targets. And what we saw is all of that just came together, and the guys started achieving their targets. And that's why we achieved this record quarter. Contribute really to the team coming together.
Well, in terms of actual production, was it more increased tonnage, or was it more increased grades, or both that led up to the record production?
It was both. It was increased tonnage and increase in grade. The first quarter, for example, we had slight delays on getting into the right areas, especially some of the higher grade areas. And that fell into place now. So you had a bit of a lag as far as the higher grade areas were concerned. And the second quarter the grade was spot on, and then the third quarter some of that higher grade material that came through in the third quarter, which gave us a little bit of higher grade in the third quarter. But with that came the extra tons, and because of that, we had a record quarter.
Speaking of tonnage, what is the nameplate capacity of the mill?
All right, we're at full capacity currently. We're doing 2,400 tons a day, and that relates to about 72 to 75,000 tons a month, and that's about 850,000 tons a year. Now, if you look at our plant, the milling section, that's our capacity, and then also if you go to our CIL section of the plant, that's also at full capacity. So currently we're running at full capacity, and hopefully with the increase in the grades, we can create a bit of flexibility there. But we're running that mine, very hard at the moment.
What throughput do you expect over the coming 12 months? Do you expect to continue at 2,400 tons per day?
Yeah, what we need to understand is, because we were in a build-up phase, you mine what you open up. That's not ideal, because you want to create a bit of flexibility. And we're mining out from on the horizontal levels now, from central shaft into the new mine, and that will give us flexibility. So at this stage, I would say mining areas is our, compared with we're already running at full capacity in the plant, but mining areas and flexibility is our biggest constraint. And therefore, over the next 3 to 4 years, you want to create that flexibility and get ahead of yourself, because some stopes the grade might drop, and you will have to move immediately to other areas, and you want to create that flexibility. And then we're also doing a lot of exploration currently, and that will tell us, how much we open up, how much ounces we can add to the current infrastructure, and that will tell us in the future what we can do. But for the immediate future, next 3 to 4 years, like I said, the focus is really on creating flexibility and maintain sort of the 2,400 tons a day.
Would you say that you're mining or milling constrained at the moment?
Yeah, I would say more mining. As I mentioned, we need to create flexibility.
How much of your operating costs are fixed? I.e., what potential do you have for cost reduction per unit as you increase the throughput, which you did in the past quarter?
About 60 to 70% of our costs are fixed. And when you build up production like we did, all the focus is to get to that magic number of 80,000 ounces, and you're not efficient. And where we are now, we got to that 80,000 ounces, and we are really going to, especially next year onwards, we're going to focus on optimizing, getting our productivity higher, try to get our unit cost down. I see more opportunity in that, because if you look at before, it took us about 2 to 3 hours to get our workers to some of the furthest working places, to get them down the mine and into those working places, and then 2 hours back. And if they work 9 hours, you had an effective face time of about 5 hours. With Central Shaft right in the middle of sort of the mining areas, they get to the working places now within half an hour, 45 minutes. So we have more face time available now. And one of the last projects that we are busy with is we're installing a compressor, because we drill with compressed air. And as soon as that compressor is commissioned, and that compressor will be commissioned by the end of November, that will help us a lot to drill faster. And will help us again, like I said, to improve our productivity and start cutting down on our unit costs. So optimizing where we are now is really the first focus before we look at the economies of scale and trying to increase the production.
The CIL circuit has a 3,800 tons per day capacity, right? But how easily would it be for you to bottleneck the mill in order to increase the processing capacity from 2,400 tons to, say, a bit more, if you would like to?
Yeah, if we want to do that, we will have to add another mill and some crushers as well, another crusher. And then if you say, the CIL plant capacity is 3,800, what we saw, that was during the time that they reworked tailings, earlier years. So what you see with the current run of mine ore that we feed through the CIL section of the plant, retention time is becoming a bit of an issue. So we will have to add 1 or 2 extra CIL tanks if we want to increase the tonnages.
How does the mine sequence look for the rest of the year and next year? Do you think sort of that the head grade will be close to the average proven reserve grade, which for the viewers' info is 3.3 grams per ton?
Well, that is what we target, and sort of relating back to some of the deeper drilling that we've been doing, we've been seeing the grades are increasing. So I think in the near term, we are going to be pretty much consistent around the 3.2 to 3.4 as a head grade. And there's a possibility in the coming years that the head grade might increase. We would probably keep production stable, which will also be of benefit to our equipment and infrastructure, meaning that we could probably mill a bit less at a higher grade and still produce the ounces.
Your reserve statement for the Blanket mine is from year end of 2021, and you have since then drilled a fair amount. How would you say that your reserves have changed since then, especially given the drilling at Eroica?
Yeah, so the last reserve statement was effective 1 September 2022. Okay. What I can say, and it is in public domain, the drilling at Eroica has proven to be fairly much better than expected, because clearly we have our models and our expected grades that we would be drilling. And so a very common method to calculate a quick gold content is your grade, which is your gram per ton multiplied by your widths. And what I can say is that calculation is typically 40% better than what we thought we would be getting. So over time, as the drilling carries on, we would start to include this drilling into our resource estimation process. And I do expect that both tonnages and content, the ounces, are going to increase.
where at Blanket do you see the most potential for resource expansion?
So the clear and obvious answer is at depth. I mean, we're nowhere near where we would consider that we are limited by our depth. But by saying that, there's also a large amount of opportunity on the sort of, how can I say, on the inter-shear type structures, because what Blanket is it's a host of multiple shear zones. And when the guys started mining, they were following what they deemed to be the main shear. But as we develop more and more and we drill more and more, the shear zones are not exactly parallel to one another. So as you mine an area, you do find an offshoot shear that joins to another main shear, and these haven't been explored. We find that with a lot of our run-of-mine drilling, we encounter new zones of grade, and these then get drilled out further. So there's a lot of that, specifically on the upper levels of the mine, that we need to go back and actually have a look at.
Regarding the solar plant, because you own it, Caledonia owns it, not the joint venture on the Blanket mine, are you planning on selling it?
Yeah. The solar plant's 100% owned asset by Caledonia. It supplies the Blanket mine. It's in a separate solar vehicle. And Caledonia currently gets 100% of the returns of the solar plant. The solar plant's set up to sell power to Blanket mine, all of the power that's currently producing, and then sell that to Blanket mine at a fair value.
You have recently done some significant investments in the Blanket mine and the central shaft, tailings facility, etc. And you had a record quarter of production in Q3. Should we expect the capex to decrease at Blanket, or do you have other significant investments?
No. The tailings facility will cost about $25 million. That is the last significant capital project of Blanket Mine. Thereafter, Blankets, then in 2020, we'll have a little bit more. So capex for 2024 should be somewhat lower than 2023. 2023 will be about $34 million. 2024 should be, say, $27 million, something like that. And then it should begin to fall from there onwards down to, I'd have thought, $10 million a year. So that we don't expect to see the level of investment that we've incurred over the last sort of 5 years or so at Blanket continuing.
You have been quite active on the acquisition front. Could you explain the rationale behind acquiring Bilboes and Motapa?
Yeah, well, I think as I've explained, we know that Zimbabwe is very prospective for gold, because there's been a real lack of exploration activity in Zimbabwe for the last 50 years or so. And even when there was exploration activity taking place, in the 50s and 60s, it demonstrated that Zim was a real standout location. So in terms of the prospectivity of the location, we think Zim's fantastic. We know that we can operate successfully in Zimbabwe. We've demonstrated that for the last sort of 12 years or so. And perhaps we can talk about the Zimbabwe operating environment shortly. So Zim is the place where we are, and Zim's the place where we want to be. We looked at about, I think probably 20 to 24 assets, and narrowed it down quite quickly to the ones we really wanted. The one we've been chasing for a long time is Bilboes. We've been chasing that since 2016. We closed that deal earlier on this year, and we like it because it's high grade, large, and it's got a feasibility study. And then to put the sort of the sort of jam on the cake, to sort of really sweeten it, getting our hands on Motapa, putting those two assets together, putting together those two assets that we believe could be a standout sort of Premier Division gold asset. It just made compelling sense to us. Maligreen, that was the first asset that we bought, and it's probably at the back of the queue now. But we think we've got our hands on a great portfolio of assets in a country where we're very, very comfortable operating. So that's why we did what we did. I think it's fair to say that we're done now. we've got our plate is full, and we've got plenty to keep us busy with.
Speaking of Bilboes, I mean, you're planning on to develop it with a phased approach in order to reduce the capex. As of now, what initial capex for the first phase do you think would be reasonable ballpark?
It's very difficult. That work is happening right now. So we're just to be clear, what we're interested in doing is minimizing the upfront capital costs. So therefore, minimize the extent to which we've got to dip into our pocket to fund it, and clearly minimize the equity dilution. But it's got to be something that stands on its own 2 feet. It's got to be an asset that will make money, because we'll need to harvest that cash from the first phase to fund the second phase. So it can't be so small as not have critical mass. So my expectation will be something between 60 and 80,000 ounces a year. Capital cost for that could be anything. Just purely guessing here, anything between 100 and 150 million dollars. I'd have thought. So substantially smaller than the big project. The capital cost really depends on if you know that you're going to build a 60 or 70 or 80,000 ounce a year mine with every intention of doubling the size of it, the temptation would be to put in place some of those capital works which are overscale for the initial project, which will save you money in the long run. So that's kind of why it's quite a broad envelope. But that's exactly the work that's taking place at the moment.
You have commissioned a new feasibility study for Bilboes, since you're contemplating a phased approach. And when do you expect that feasibility study to be released, roughly?
We do expect the feasibility study to be out in Q1 of next year. So once we see that, we'll know exactly what our funding requirement is. And we'll come back to the market and explain our approach.
Could you add some color on what changes you're contemplating in the new feasibility study for Bilboes compared to the old one?
The experience that we have at Caledonia, we just finished sinking a new shaft and building a new mine. With that, we also had to build a new tailings facility. And we just started pumping slurry yesterday on the new tailings facility. And the team, especially the technical team and on mine as well, are really sort of experienced in doing new projects. And that knowledge, will go towards the feasibility study, and the technical team is already involved in the revised feasibility study as far as Bilboes is concerned. So it's current experience, on the ground experience that we looked at. And again, you look at the feasibility study as it is, like it was done in 2019. A lot of things changed since then. And, again, it's looking at where we can optimize, where we can phase, especially the capex, and looking at different approaches to get to eventually the sort of 240,000 ton a month mine that was done in the feasibility study.
Would you say that Caledonia has the in-house capabilities to carry out the construction of a project like Bilboes?
When we start building the mine, I mean, currently we don't have all the skills for that. But, I'm not talking about a lot of skills extra that we need to do that. Our technical team that's busy with the feasibility study as well, they're good enough to complete the feasibility study with the help of DRA that has done the previous feasibility study. And then when you start building the mine, obviously you will need a couple of extra skills. But again, I'm not talking about a lot of high-level extra skills. You're talking about maybe 2 or 3 people that you will target and to get on your side.
You're currently returning the Bilboes oxide mine to care and maintenance as of now. So how much do you expect the care and maintenance expenses to be?
Well, I can't really comment on what the expenses are going to be. I think that's more of a question for the CFO, because it's continually changing. But what I can also say there is that with the care and maintenance, it's not just a expense; it's also a income, as we are going to be, we are turning the heap leach pads, and we do get some small revenue coming out of them as well. But it's a security contingent, some of the more senior people, so the costs are expected to be small.
When are you planning on initiating the exploration program at Motapa, which is adjacent or contiguous with the Bilboes project?
What we have done is we have done the surface geo mapping. We have completed a ground penetrating radar survey of the whole area. We have flown a aeromagnetic survey over the area. We have done some soil geochemical sampling. We've done a few trenches to open up some of the areas to have a look at. There was another thing that we did. Let me just check my notes quickly. The aeromag, the GPR, the mapping. Yes, and we've also managed to source quite a number of historical records, and some of them have some plans, some history around the historical mining that took place. So all of that is being used to generate targets. And we would expect to kick off drilling, reverse circulation, and diamond core drilling during 2024.
With the reverse circulation and the diamond drilling, what questions will you be trying to answer?
So some of the things that we need to understand, first of all, is there any remnant oxide material left on areas that haven't been mined? Because it was an oxide mine in the past. Because clearly, if you can find oxides close by or that haven't been mined, we have the Bilboes processing facility right next door. So that could be a nice quick win for us. But the main focus at Motapa is going to be to understand what happens at depth. We do have a few, not very many, historical drill holes that go down to about 80 meters. So we would like to drill beyond that and understand what the sulfide mineralization is doing at depth. So it'll be a process probably over 3 to 4 years of drilling out the targets and proving up a sulfide resource that we can exploit by open pit methods.
What is your plans for Maligreen for the next coming 12 months?
Well, I don't like keeping assets dormant. I mean, if you think back to where Caledonia came from in the sort of coming out of the last century, we had a whole pile of assets for which we didn't have the management capacity or the finance to do anything to them. And I think it's wrong to hold on to assets where you've got no intention of doing something. In the modern day, governments and communities get a little bit edgy if they see people sterilising assets. So we will explore other alternatives with Maligreen, perhaps to joint venture it, because it's relatively small, Maligreen. Bilboes and Motapa, will support something in due course, could be sort of 350,000 ounces a year. Maligreen at best will be sort of a 50,000 ounce a year producer, so it's relatively small. So maybe we can joint venture that with someone locally to just get some activity there for everyone's benefit.
We have now arrived at Caledonia's capital structure and financials, where we will discuss their capital structure, access to capital, ATM program. We will also inquire how they plan on funding the build of Bilboes, as well as digging into certain line items and taxation. Could you describe Caledonia's capital structure with regard to shares outstanding, options, debt, cash, etc.?
Yeah, for the last couple of years, we've been very much busy with the expansion project at Blanket Mine. It went quite well. We increased production from 40,000 ounces to 80,000 ounces. And in addition to increasing the ounces and the production capacity at Blanket, we also increased the cash generation of Blanket. And that allowed us to obtain a compelling suite of gold assets in Zimbabwe while remaining conservatively geared. If you look at our capital structure, we've got approximately 19 million shares in issue. That's listed on an ISE AIM and the VFX. And we have a market capital of just over $200 million, but a small amount of share options, about 20,000 share options outstanding, very small. And then we've got 20 million in debt, cash around 13 million at Q3 end.
Caledonia owns 64% of the Blanket mine, but through vendor facilitation loans, you receive a higher percent of the dividends from the joint venture. Could you add some color on how this works?
Sure. Caledonia owns a controlling stake of 64% in the Blanket mine, on which it receives 64% of the free cash flows of Blanket mine by way of dividends. It further has facilitation loan receipts in the Blanket mine from the non-controlling interest shareholders, and that's valued at $13.3 million. Caledonia will receive that up until the vendor financing loans are paid off, and we expect that to be Q3 of 2025. And effectively, Caledonia will receive during that period approximately 80% of the free cash flows of Blanket mine.
We would like to move on to funding. So you raised 16.6 million US early this year, the CRDs plus the fundraise. Could you explain why?
Yeah, to some extent we had to replenish the treasury, as we've been using Blanket mine as a I hate to say it, this sort of phrase, as a sort of piggy bank to fund. And Blanket's had its own, as you've heard, its own substantial capital requirements over recent years as we built the central shaft. But we've also been using Blanket to fund things like the acquisition of Maligreen, $4 million. We use Blanket to fund the extra cost of the solar project over and above the $12 million that we raised on the New York Stock Exchange. We use Blanket to fund the acquisition of Motapa, and also used it to fund the not inconsiderable costs of doing our due diligence on Bilboes. So to some extent, there was an element of replenishing the coffers, but also we wanted to put ourselves in a position where we could start to turn these assets to account, in particular so we could start exploration work at Motapa.
You have an ATM program in place, which enables you to sell up to $30 million worth of shares. Could you explain how you intend to use the ATM program?
Well, actually, the ATM program was only a housekeeping measure, which we put in place because we knew we were going to get readmitted to the Russell 3000 index. And based on what happened the last time we went into the Russell 3000, we hoped that might give rise to a fairly sharp increase in our share price, which we could then harvest. That didn't materialize because this time everyone could see us coming into the Russell 3000, whereas last time it came as a bit of a surprise. And so we didn't get the share price pop. So frankly, at this stage, we have absolutely no intention of using that ATM at all.
Okay, so you wouldn't even at, I don't know, $18, $20?
Oh, yeah, if the share price went to $20, because clearly we are going to need money to fund Bilboes. So clearly, if something happened and our share price shot through the roof, we would take advantage of it. But the disadvantage with an ATM is that it doesn't give you the opportunity to shape your register. It just goes blind into the market. And yeah, that might be fine at the right time. But if you look at our register, we'd much rather, if we could, use any equity raise to try and shape the register by bringing in institutional investors that you could talk to. But the downside to that is that nearly always comes at a discount. And so it's got to be a balancing. One of the things that should be coming through in this conversation is our focus on maximizing NPV per Caledonia share. And as a Caledonia shareholder, I don't want to incur unnecessary dilution, and unnecessary dilution is bringing in institutional investors at a 9% discount. So you've got to balance those things. The benefit of getting a recognised institutional investor on the register, the downside being you don't want to incur unwanted dilution.
So you have some debt from the solar loan notes, 7.7 million, I think, is the principal. But could you just add some color on what's the interest rate on the loans, and when do you have to pay back the principal?
Yeah, I said we conservatively geared after the self-funded Blanket expansion program, and that helped us to acquire several gold assets at very good prices. After these acquisitions, we increased our gearing to 6.5% of our total assets. So as I said, it's very conservatively geared, and we did that by way of bond issues and also increasing our overdraft facilities. That leaves a lot of room for increases in our debt for future expansion and exploration funding that the group has available. So we could move on projects like Bilboes and also do some further exploration at Motapa and Blanket. And as you rightly point out, we have bonds and issues, an issue of $7 million. Bonds carry interest of 9.5%. It's payable biannually. And it's got a capital repayment, a bullet repayment at the end of Q1 of 2025. In addition to those bonds, we've got overdraft facilities available of up to $20 million. We've drawn $40 million of that, and that's mostly used to fund working capital fluctuations at Blanket Mine. It's all Zimbabwean-based overdraft facilities, and we believe that it's really good to have those overdraft facilities to support the debt market in Zimbabwe.
You mentioned that, at some point in the future you will have to fund the Bilboes project, and even if you go with a phased approach, the capex will be probably well above 150 million. So could you describe how well do you have access to capital when it comes to debt and equity?
As you now partly mentioned there, we're looking at various approaches on how to unlock the value out of Bilboes. We're looking at a big approach that's quite large, and then the phased approach that's it's a lot smaller and partly self-funded. On the small approach, we're looking at $100 to $150 million that we have to raise for the peak funding requirements of the project. Our main focus on raising that cash would be to minimize dilution and maximize shareholder value. So that's basically the overarching goal in terms of this feasibility study. And if we have to raise 150 million, we'll look at 100 million of debt, probably through senior debt. And what we've also noticed is there's some appetite in Zim at the moment of between 20 to 30 million in the Zim market in bonds. So we believe between senior debt from a DFI or the local bond market, we should get a total of at least $100 million. And there's also other options available that we could consider, like mezzanine debt or some streaming options. But mainly our focus is on senior debt on the bond market. The remaining 50 million we could fund through internal resources. I reckon we can get half or maybe more of that through internal cash resources, and maybe do a small equity raise of 20 to 25 million. To minimize shareholder dilution, maximize those returns.
What payabilities do you receive on your doré bars? Is it above 99% or?
Yeah, we sell 4 9s gold to the refiner. We get the LBMA price for that. Less about $7 as a refining cost. In country, from Fidelity Gold Refiners, we pay about 1.25% to refine the gold locally.
How much of your gold is sold in Zimbabwean dollars?
25% of our gold is sold to Fidelity Gold Refiners. That's based in Zim, and we also receive some dollars for that. 75% of our gold gets exported through a toll refining agreement, where we sell our gold currently in Dubai, but we can sell wherever we want them globally. Receive 100% of that portion in US dollars, and it's been working quite well for us. It gives us an alternative route to market. And in addition, it's also reduced our debtor days. We receive our cash within 2 days, and as you'll see in our financials, we've significantly reduced our trade and other receivables, and so improved our working capital.
Now we have spoken a little bit about marketing arrangements, and now I would like to move on to, there's a capital allowance in Zimbabwe. Would you explain to how that works for you?
Sure. The Zimbabwe tax regime has got a 100% capital allowance deduction that allows you to deduct all of your capital expenditure when it's incurred. That helps a lot with the discounted cash flows, moving cash flows, giving you tax breaks early on in the project, so you can deduct that and have some tax breaks that increase the net present value. So it's really a nice initiative, and it also helps up the value of new projects.
What is the corporate income tax rate in Zimbabwe?
It's effectively the corporate income tax rate is 24.72%. 24% of that's made up of corporate income tax, and then 3% aids levy based on the tax liability. If you look at blanket, our effective tax rate on profit before tax is approximately 30%. That's a more mature asset after we've spent our capital, and that's got an effective tax rate on profit before tax of around 30% due to some unrealized foreign exchange losses that's not deductible until realized.
Regarding taxation in Zimbabwe, are there any special taxes, royalties on mining in Zimbabwe?
Yes, we've got a 5% revenue royalty. Applies to all gold revenues produced in the country. So Blanket pays that, Bilboes pay that. And then there's an additional 5% withholding tax that applies to our dividends when we move dividends out of Zimbabwe.
Do you have any tax assets or other ways of deferring tax payments that you use on a regular basis?
Yeah, we've got an assessed loss at Bilboes of approximately 8.9 million. That would help quite a bit when we start that project. That is very much eclipsed by the $100 to $150 million that we'll spend in capex at Bilboes. And other than that's our main losses. Blanket's producing, it's making profits, it's paying taxes, and other than the Bilboes, that's our main assessed loss that we can utilize in deferring any tax payments in the future.
We're now switching over to discussing how Caledonia's management plans on deploying its capital. They already have a dividend in place and a sizable gold project, as well as 2 exploration projects, meaning that they will have to prioritize. We will also touch on how Zimbabwe is as a mining jurisdiction and the vision for the company. You're solely operating in Zimbabwe, so how is Zimbabwe as a mining jurisdiction?
It's nothing like as difficult as people might imagine. The only operating difficulty that we face is electricity, which I think we discussed along with South Africa. Zimbabwe just doesn't produce enough electricity, and so we get power outages, and then on top of that, because the quality of the grid's not been maintained for sort of decades. It's a very poor quality grid, which means the power we do get is subject to very significant voltage spikes, which can cause enormous damage to our equipment. So we've had to spend many millions of dollars to fix that. So, the most notable thing is putting in the solar plant. Well, I've got to say, the government was, they fast-tracked all of the regulatory stuff, and we're bringing large amounts of stuff across the border, and we had no difficulty getting stuff across the border. They really helped to facilitate it, unlike, say, South Africa, where the government's been quite obstructive in that respect. We've also had to put in a lot of equipment to protect our own equipment. So electricity is the main problem, but we've fixed that through a combination of solar and diesel. The other stuff are consumables. All the consumables we pretty much procure in South Africa. Some of them are actually imported into South Africa from, say, drill steels, I think, come from Sweden, what have you. So we pretty much buy everything we need in South Africa. We've got a procurement business based there. We amalgamate it in our own warehouse in Johannesburg and truck it up. It takes about 36 hours from leaving Johannesburg to arriving at the mine, so we're very efficient on that. Labour, one of the real standout things about Zimbabwe compared to other jurisdictions is the quality of the workforce. Highly educated, great work ethic, and with a mining culture. So the quality of the workforce is second to none. We've got 2,000 workers at the mine, and every single one of those is a Zimbabwean. We don't run the mine using expensive fly-in, fly-out expats. Where Zimbabwe is challenging, it's difficult, is the bureaucracy and administration. which is process. It's not intended to be obstructive, but it is very, very bureaucratic. And so simple stuff like, making foreign payments. It's a process. We're not stopped from making payments, because clearly, if we couldn't make foreign payments, we couldn't pay my salary, we couldn't pay dividends, we couldn't procure stuff in Johannesburg. So, we've never failed to get money out of the country. It's just a continuous process that you've got to pay very, very close attention to. You don't just sit at your computer, press a couple of buttons, and press the send, and then go away. And it's much more complex than that. And frankly, to go back to why did we invest in Zimbabwe? We've actually got a unique competitive advantage because we actually know how to do this stuff. Whereas a newcomer into Zimbabwe would just struggle so much, just wouldn't be able to do it. And we have seen some of the majors coming in, lured into Zimbabwe because of the quality of the resource base there, and just struggling to actually make practical payments. And we can do that. So that's our unique sort of proposition in Zimbabwe. Union, there's no difficulty with unions. There are unions there, but they're not particularly militant. Community relations are excellent. The government pretty much leaves you alone to get on with it, without sort of interfering. So it's nothing like as difficult. And the things you don't get, there are no significant security concerns. So we drive around Zimbabwe, in a carefree manner. We have no difficulty shipping our gold. Our supplies don't get intercepted. Diesel and that sort of stuff doesn't get hijacked. The only time we've had a consignment hijacked in the last 12 years was actually in South Africa, not in Zimbabwe. I believe there's no significant risk of nationalisation. The government now understands that they need to be more business friendly to encourage inward investment. So Zimbabwe, I think, is much overlooked, and as actually people talk it down. But actually, I think we're living proof that it is an environment that you can operate in quite profitably.
One concern is always permitting timelines due to bureaucracy and environmental agencies and etc. How is that in Zimbabwe? For example, if we would permit the Bilboes mine?
Yeah, it's permitted. This is a question often raised by people who live in sort of certainly North America. Permitting. Absolutely not a problem. All the time I've worked in Zimbabwe, we've never ever faced untimely delays in terms of permitting. You need a permit for most things. Clearly, you need a permit for the mine. You need a permit to move explosives. You need a permit to extract water. You get them, and actually, that's one of those areas where the bureaucracy works reasonably well. Actually, so no, that's absolutely not an issue.
How are your local community relations? Have you had any issues with protests at Blanket?
Not at all. Absolutely not at all. As I mentioned earlier on, the local community is a 10% shareholder in Blanket, which actually means that they get hard cash every quarter. And we also have a quite a good CSR program. I was visiting some of the projects a week or so ago, and I could show you the pictures of the school that we're refurbishing this time last year and last week, and the difference that we've made. I mean, the headmaster said it's transformative. Classrooms have been converted from things that, in Sweden you wouldn't put cattle in, into something that actually looks first world and is first world. So we've got fantastic community relations, and that's one of the things. I think that we bit that bullet in 2012 by implementing local ownership, and it stood us in excellent stead going forwards. We'll clearly do something similar for Bilboes, but clearly we'll do something for Bilboes once we've got a mine there. We're not embarking on a CSR project when we don't have an operating asset there.
Caledonia pays a quarterly dividend. Could you explain Caledonia's dividend policy?
Well, without being facetious, our dividend policy is to pay a dividend. That's it. Okay. We don't have these sort of fancy pants formulae, driven by the gold price and our costs and our capex, that sort of stuff. You'll notice that the dividend payments are timed; they're not connected to quarterly performance at all. So our dividends are declared in early January and paid in late January, declared in early April, paid in late April, then again in July and November, July and October. And that's at a point when we've really got no visibility. We don't sort of say, here's the quarterly results and here's the dividend. It's the dividend floats above. The idea is that the dividend stays the same, and over time should increase. We don't. So we're fairly cautious on our dividend policy, but we do believe it's given investor sort of sentiment, adverse investor sentiment towards Zimbabwe. We pay quarterly to prove to people every quarter, here we are, we're still in business, we're still making money, and just to prove the point, here's a check. And we think it's a good discipline for management as well to pause and think that we're running this business for the benefit of shareholders, not for management.
Okay, but clearly there must be some visibility. I mean, right now it's around 14 cents per share. Is that at least something that you, given that the gold price at least is in a relatively decent shape, that you expect to continue with?
Well, look, it's 14 cents a quarter, so it's 56 cents for the year. Okay, we're on a yield of about 5%. Don't forget, we have a very substantial capital requirement going forwards. So it's a balancing act. If we were to cut the dividend, that would almost certainly, and absolutely certainly, have a very adverse effect on our share price, which would then mean that to raise a modest amount of equity to fund the new project, we'd have to issue more shares. So there's a circularity there. But certainly for the time being, whilst we're fully engaged, we're limbering up to embark on a fairly substantial growth program. We certainly wouldn't envisage increasing the dividend at this stage. I don't think we're not talking about cutting the dividend. I can't give any guidance on that, but I think if people expect the dividend to increase now on the back of a higher gold price, when we're poised to invest very substantially in new assets, I think that's a little bit naive, I'm afraid.
So how are you thinking in terms of capital allocation for the next sort of 3-4 years?
So capital allocation is clearly finish the feasibility study for Bilboes, which shows us the optimal development route, which is to create an asset that's got sufficient scale to be cash generative and stand on its own 2 feet and generate sufficient cash to contribute to the second phase at Bilboes, to introduce a modest amount of gearing into that project. I suspect we'll be offered more debt than we're willing to take. I think you'll find that as a company, we are fairly conservative in our funding structure. We will look to realise non-core assets and non-core mining assets. So potentially things like the solar project. We built the solar project ourselves using our own money. All we need to do now it's there is benefit from the cheaper electricity coming out of the solar project. We certainly don't need to own it. And there are people out there who've got a much lower cost of capital for infrastructure projects than us. So we can realize some capital from sort of non-core non-mining assets. And then the balance would be equity. And clearly we want to minimize the amount of any equity raised. But the other side of the coin being, if we can minimize the equity raise, but bring in recognized institutional investors, that would be good. So we're very clear that we're running this business with the perspective of maximizing the net present value per Caledonia share, with a view to boosting value for shareholders. Okay, I mean, I keep on coming back to that, but it's absolutely core. It's the central thing to what we do when we run this business. So sorry to bang on about it, but that is what we do. That is the focus of management and the focus of the board.
With that, we have actually arrived at the final question. Where do you envision Caledonia Mining in 5 years?
5 years, how far we've gone down our growth trajectory is difficult to predict. So we've got a clear growth trajectory. I mean, Blanket at 80,000 ounces, Bilboes 170,000 ounces, Motapa probably even bigger than that. We won't get all that done in 5 years. If in the end of 5 years we've managed to finish the first phase of Bilboes, say 80,000 ounces, and be reasonably well advanced on preparations for the second phase. So 5 years' time, maybe we'll have got our production up to 150,000 ounces, but then with a much even more robust cash generative engine in the middle of the business, which will then spin off more cash to make the subsequent developments of Bilboes Phase 2 and Motapa much more fundable without recourse to equity.